Hello, friends. Welcome to the Weekend Investing Stock Market Weekly Review for 17th of April. A short week, three sessions only, Monday and Friday being holidays, but nevertheless, a good week. Uh, a week that was not as expected. The markets have come off the bottom very, very sharply in just 7 or 8 sessions. Nobody was expecting that. And that's what the markets usually will do. They will surprise most of the people in the market. From our research desk this week, we had these fantastic stories: pitfalls of passive investing, India's gold consumption story, what happens when VIX falls, some history lessons. Are you able to spot changing trends? How much gold allocation is good, and so on and so forth. Do read all these stories at our uh, Weekend Investing app or at the blog or in the daily newsletters. And some of these will also make it to our YouTube channel. Disclaimer, please read it fully, understand it fully before going forward. And do subscribe to the channel if you haven't so far. Nifty, as you can see, this last day's candle, amazing candle of a few percentage points right here. And this week, 4.48%. Nobody's complaining about this. We are now above the 100 DMA. We are very close to these pivotal sort of points of breakout. Thrice we have tried this, and maybe we will break out. Certainly, the downtrend seems to be at least now consolidating, and we are yet to start on an uptrend. On the weekly charts, this is more obvious. You can see here that this gap down, which happened last week at the start, actually was the low of the week, and it opened there and it just went up. This week, there was a gap up and it went up. So the last 2 weeks have been just, denying the bears any move to their side, and in fact catching most people by surprise. um, Beyond this current level, of course, there will be a lot of short covering that will start, and potentially we are now headed towards this next peak. Hopefully, let's see where we go. S&P 500, however, was down 1.5% this week. So, of late, in the last 6 7 sessions, there has been a divergence between the US markets and the Indian markets. Maybe gradually people are understanding that this spat between US and China does not impact us so badly. In fact, we may be beneficiaries, and that is coming out in the strong rally that is seen here. Gold is in another sort of, what should I say, on another planet. 1.83% again this week after jumping up very, very hard last week. So there is no let up. I mean, there is, from the highest point, which was around 98.50, we are down to 96.77. So there is no let up at all that is happening. In the last uh, about 13 or 14 weeks, we've had some very minor down weeks. Otherwise, it has just been up, up, up. And since September, when gold was nearly 52,000, we are already at 97,000. I mean, just imagine the move since September 23. In 1.5 years, the entire game has changed for gold. Dollar index is looking weak. It is right there, at that cusp of a big breakdown. Of course, the current move has been very sharp, so it may consolidate here or bounce here. But once it convincingly breaks down from here, dollar is going to break against other currencies. Versus the INR, it is not falling at all. Essentially, INR falls against other currencies now. So we are falling against GBP, we are falling against Euro, we are falling against Swiss franc. So all our uh, expenditures in those currencies for imports are going to be bleeding us. Benchmark indices overview. Nifty next 50, 4.5%. In fact, everything was 4.5%. Very, very strange, but very standardized 4.5% across the board. Kind of a week that has gone by. So now the year is not looking so bad. So last 1 year now is Nifty 7.5%, and Nifty small caps also managing to come in the green. On a 3 year basis, everything is in double digits returns, annualized returns, and on 5 year basis, we are in double digit, very handsome returns. So always see the perspective from where we are coming. If you have been invested for 5 years, you've enjoyed these kind of gains, and hence a year of such move, which is flat, is more than welcome in my view. In the sectoral overview for the week, 6.95% is the move in real estate. Fantastic move. Private banks moving very big, 6.94%. If you recall, in the last 1 year, private banks had not done well, but now they've started to move at 14.3% for the last 1 year. 6.1% for financial services. These are now at all-time highs. So in the last 1 year, financial services has done well at 23.6%. 6.4% for banking in general, 5.5% for capital markets. So that also has done very, very well. In fact, the best in the last 1 year has been on capital markets. The worst performing has been energy and real estate, which have somewhat come back in this current week. So reasonably healthy week for all sectors. IT and FMCG still reeling, uh, flattish so far. But let's see where we go. IT results have not been very exciting, and that probably is the reason why IT is at the bottom of the even the momentum sectoral momentum score. You can see IT is at the bottom, auto is at the bottom, energy is at the bottom, metals are at the bottom, and real estate, which had reached down, is starting to pick up on a short term basis. FMCG has lost it again. Capital market is reviving. Private banks are up there. Financial private banks and financial services, that is the game in the market as per this situation right now. PSU banks also making a comeback towards the top ranks. Weekly advance decline stats. Nifty 98% advances. Nifty next 50. Everything is 90 plus percent plus in terms of advances. So very good week for advance decline ratio. Number of stocks, percentage of stocks outperforming benchmarks. Uh, 40 to 50% of the stocks are outperforming the benchmark in all the indices. And over the last 1 year, only Nifty has done really uh, comparatively better than others in terms of percentage of stock. Only 34% Nifty stocks have beaten the Nifty, which is not such a great figure, but much, much better than these ones out there. Market cap segment drop from 52-week high is has not changed much from previous week. We still have Nifty concentrated in up to 30% drop from the top. Nifty next 50 is concentrated in 10 to 40%. Mid caps 10 to 50% along with small caps. Small caps are more 20 to 50% actually the concentration, and micro cap is 20% to 50% in terms of the damage done. So, of course, Nifty 50 has the least damage. There are only 14% stocks which are beyond 30% drop for the Nifty. So, is the trend improving? Is the question. Certainly, the 50 DMA is showing you that the trend is improving. The 200 DMA is also moving up in terms of percentage of stocks above the 200 DMA. So, 27% now versus 13% earlier, and 58% on 50 DMA versus 6 7% way back in March. So things have improved. More and more stocks are coming above their trend moving averages, which is a good sign. In terms of sectors, energy sectors are going great for the short term. 100% stocks in energy are above 50 DMA. Financial services doing very well. FMCG also above 50 DMA. Private banks, commodities, all these have done reasonably well. IT stocks is the stark outlier. At no stock in IT being above 50 DMA, and perhaps nothing in 200 DMA as well. So IT, real estate, and energy are long term still not yet able to come up above the 200 DMA. Whereas in financial services, you still have 70% of stocks above 200 DMA. Private banks have 60%. So this is where some of the focus should be for discretionary trades at least. On the FII DII front, we have some good news from FIIs. The three sessions we had this week, we have positive investments from FIIs, which is very good news. DII is some mild counter trade. So as I've explained many times, institutional trades happen when there is a corresponding institutional counterparty. So if FIIs want to buy, they'll have to find an FII who's selling or a DII who's selling, and usually it is the other way around. FIs and DIs normally play the ping pong on different sides of the court. So that's the scenario on FIDI. And here you can see very, very clearly in the last 1 month, 37,000 crores have been poured in by DIIs, and FIIs have almost come back to zero. So net last 1 month, there has been no FII outflows. That is the silver lining and the positive news. that I'm going to leave you with, and you can have a happy weekend after hearing this data point. Thank you so much for watching these videos, and do share these videos if you think somebody can make use of them, and do like and subscribe to the channel. Thank you. Bye.